Hello guys, welcome back to Study FX channel. On this channel it's about forex trading, binary trading and crypto trading. If you're new here, welcome, and if you're a returning subscriber, thank you for always coming back to watch my video. So guys, on this video I'm going to be teaching you on how you can understand a pip and show you how to calculate a pip in forex. So make sure you watch the video until the end because you are going to benefit from it. So let's get started. As you all know, forex trading involves buying and selling currency in pairs such as euro USD. We have gold, we have USD JPY. So a crucial concept in forex trading is the pip, which stands for percentage in profit. Understanding pips is essential for calculating profit, loss, and overall trading performance. So, what is a pip? So, a pip is an exchange in value between two currencies on market conversion. In most currency pairs, a pip is typically equal to 0.004, except for currencies that involve Japanese yen, that is JPY, where a pip is equals to 0.01. So example, we have euro USD. If the price moves from 1.1906 to 1.1907, it has moved 1 pip. But if it's USD JPY and the price moves from 115.23 to 115.24, it has moved 1 pip. A pip is usually the last decimal place of a price quote. So what is a pipette? They are forex brokers that quote currency pairs beyond the standard 4 or 2 decimal places to 5 and 3 decimal places respectively. They are quoting fractional pips, also called points or pipettes. A point or a pipette or a fractional pip is equals to a tenth of a pip. So example, like the fifth one is the pipette. So if GBP USD moves from 1.5134.5 to 1.5134.6, that 0.00001 USD, that is 1 pipette. So I'm going to show you how to read a quote. So let's just use JPP USD. So JPP USD is 1.62375. 5 is equals to 0.5 pips, meaning it's a tenth of a pip. And 5 is also called a pipette. 7 is equals to 7 pips. 3 is equals to 30 pips. 2 is equals to 200 pips, and 6 is equals to 1,000 pips. 1 is equals to 10,000 pips. So the next thing that we need to do is to calculate to understand the pip values. The pip value represents the monetary value of each pip movement in a currency pair, which varies based on the currency pair being traded, the size of the trade, which is equals to a lot size, and the current exchange rate. So the standard pip values, we have major currency pairs. So for example, we have euro USD. For the standard price or the standard lot is equals to 100,000 units, which is typically a 10 USD per pip. For a mini lot, we have 10,000 units, so which means the pip value is $1. So for micro lot is equals to 1,000 units, which means the pip value equals to 0.10. So for this example, let's go ahead to the trading view and then look at euro USD as the current market, and then we calculate the pip value. So example for this one, so let me change here. So let's say you entered the market here and then you did exit. Let's say even you came up to here. So we are going to take, sorry, let me one moment. I want to take here so that I can show you. For this one, let me bring it here. So here we have it. So let's say you exited the market at 1.08439. So as I told you, 9 it's the pipette. So we are going to calculate the pip from here, but we can choose to take all of it. So we're going to take 0.843 1.043 minus this is 9, so minus 0.81. So this one it's 9 minus 1.08194. So it means that we went up with 24 pips. So I'm going just to ignore the 5 because the 5 it's the pipette. So meaning we went up with we did make a profit of 20 pips or 24 pips. So that's how you calculate the pips or the pips value. The next thing that we need to learn about pips is the factors affecting pips value. One thing is exchange rate. The exchange rate directly influences pip value calculation. As exchange rate fluctuates, so do the pips values. Another thing is the lot size. As I have told you, the larger lot size yield higher pips value. Understanding how lot size affect pips value is crucial for risk management. Like you can just have US dollar and let's say you just use a lot size of 1, you're going to blow your account. So you have to use at least a lower lot size so that you can leave at least amount or the amount you are willing to risk. So the next thing affecting the pips value is the leverage. Leverage allows traders to control larger position with a smaller amount of capital, while it can also amplify profit. Practical application of pip. The first thing is the risk management. Traders use pips value to set stop loss and take profit orders. Understanding pips value helps manage risk and protect against significant losses. The next thing is profit calculation. Knowing pips value allows traders to calculate potential profits or losses. For instance, if you buy one standard lot of Euro USD and the price moves in your favor by 30 pips, your profit will be approximately $300 US. That means is 30 pips multiplied by 10 per pip. So the common mistakes that you need to avoid here is ignoring pips value for exotic pairs. Exotic pairs may have different pips value. Always check pips value before trading. So also another thing is misunderstanding pips movement. Be careful not to confuse pip movements with price points. Remember that a pip is often the 4th decimal place for most pairs and the 2nd for pairs involving the yen. So that's it for today, guys, but you have to know understanding pips and pips value is fundamental for successful forex trading. It enables traders to calculate profits or losses accurately, managing risk effectively, and making informed trading decisions. So as you continue with your forex education, remember to practice calculating pips value and apply this knowledge in real trading scenario. And also remember to practice this with a demo account. See you guys in my next video. Bye.